Welcome back to the Digital Asset Report. We're starting the second week of 2026 with a major reality check for the market. Bitcoin has slipped back below $90,000 after a brief move toward $95,000 to start the year. Even though over $1 billion flowed into ETFs in just the first 2 days of trading, that early energy is fading. Traders are hitting a wall of resistance and being cautious as the market tries to find its footing after a tough end to 2025. While price action is choppy right now, analysts at JP Morgan say we might be nearing a bottom. They point to easing sell-offs and the fact that most big investors have already finished their end-of-year selling. This creates a stable base for what is shaping up to be a transformational year for institutional involvement. The biggest story driving this institutional shift this week comes from one of the most famous names on Wall Street. Morgan Stanley has officially filed with the SEC to launch its own spot Bitcoin and Solana ETFs. This is a rare move for the bank because they almost never put the Morgan Stanley name directly on their funds. It shows they're seeing huge demand from their clients and want to own the products themselves rather than just selling someone else's.
I think that Morgan Stanley, being the first big U.S. bank to take this step to file to launch its own ETFs, is a huge endorsement. So we've started to see this comeback of institutional cash just in the first few trading days of the year. Finally, the surge in spot Bitcoin ETFs, which were net outflows for the last few months of 2025. And what this really signals is that Morgan Stanley, for one, has been the most progressive.
This move could force other banks to follow in their footsteps. It's a sign that the wall between traditional banking and crypto is finally coming down. And we're also seeing this trend in the corporate world. Rumble, the video platform, has just launched its own crypto wallet. They're working directly with Tether to let fans tip their favorite creators on the platform. This bypasses the big banks and payment processors entirely. It gives creators more control over their money and makes borderless payments a normal part of the creator economy. It's also the first real-world test of Tether's new wallet technology, and it puts decentralized finance right into the hands of millions of regular users. And while the private sector is moving fast, the focus in Washington, D.C. is facing a critical moment in the Senate. Lawmakers are currently in a high-stakes race to pass a sweeping crypto bill before next week's big vote. There are two major sticking points: how to handle interest on stablecoins and how to deal with potential conflicts of interest regarding President Trump's family crypto project. If the bill doesn't get enough support from both parties in the next few days, it could die on the floor. This is a critical window for the industry, as the Clarity Act and the other rules are needed to give big firms the legal green light they've been waiting for. Meanwhile, World Liberty Financial is making a major power move. They've applied for a federal bank charter. If approved, this would allow them to run a national trust bank that can legally hold crypto and handle stablecoins. The company wants to turn their USD1 token into a full-stack financial service for big institutions. This would bring crypto and traditional banking under one roof, regulated by the same office that oversees the biggest banks in the country. And at the state level, Florida is leading the charge to bring Bitcoin into the government's books. A new bill has just been filed for the 2026 session to create a Florida Strategic Cryptocurrency Reserve. This would allow the state's chief financial officer to buy and hold Bitcoin as a standalone asset, separate from their normal pension funds. Florida is joining states like Texas and Arizona in a race to see which state can build the strongest digital treasury. And while Florida looks to buy, California is focused on protection. As of January 1st, a new law is officially in effect that protects unclaimed crypto. In the past, if an account was dormant, the state might sell the asset for cash. Now, California is required to keep those assets in their original form. This ensures that if you ever reclaim your lost coin, you get back the actual Bitcoin or Ethereum, not just the dollar value from years past. It's a major win for consumer rights in the digital age. Finally, we have a mystery unfolding in South America. Since the arrest of Nicolas Maduro last Saturday, the world has been buzzing with rumors. Some reports suggest the Venezuelan regime might be sitting on a massive hoard of 600,000 Bitcoin. While experts and tracking firms say there's no hard evidence for a sovereign stash that large, they do admit the regime has used crypto for years to get around sanctions. Whether it's a secret treasury or just fragmented holdings, the story shows how Bitcoin is becoming a primary tool for sovereign nations that need control over their capital. 2026 is barely a week old, but the narratives driving the year are already taking shape. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.